Assalamu alaikum and very good afternoon to all of you. I was just listening and so much of learning, and I was looking at myself. Am I prepared enough to speak on this thing? So at the very outset, before I delve into the issues that has been allocated for me, and believe you me, these are not more than 6 slides. So you can possibly hold on to your concentration. So it was possibly 2016. We were having a partners meet at Bangalore in India. All the South Asia partners from PricewaterhouseCoopers. And one of our partners who has come down from Palo Alto, that is San Francisco, to India, back to India, he was referring to in his slot that are we aligned enough with the startup community? And that created so much of uproar in that venue of partners meet for PwC South Asia partners. And yes, and we need to be more aligned and identified with the startup community. So usually the question came up that yes, why? And how do you justify that thing? And first was our then Chief People Officer, and she was telling that yes, where are the IIT and IIM graduates are going nowadays? And to our utter surprise, at least for me, that we found out, and I found out, that most of the IITs and IIM graduates for last 10-15 years were not even 10% of them were not even joining the professional institutions. They were all turning into entrepreneurs. They are all turning into owners and promoters of big startups. So that was the going identified in 2016 plus minus. Second is that we are under where we work in this South Asia opportunity space or the Asian emerging country opportunity domain, that yes, you have to, if you want to become a consultant of choice, advisor of choice, you must be able to create a consultant friendly market, advisory friendly market. In that case, in that situation, pricing, how do you price your consulting or advisory project? Pricing plays a dominant role. So how do you reduce the price for a big four like Pricewaterhouse or McKinsey or BCG of this world? Then you outsource and you forge kind of stakeholder relationship. And then we also again found startup community could be a very good choice. All the brilliant toppers from IIM, IIT, or for Bangladesh, BUET and IBA, they are floating their own startups. They are floating their own outfit. And unless you align with them, unless you forge an alliance with them, you cannot incidentally or unfortunately reduce the price of your ultimate advisory or consultant architecture. So there comes another role of this startup community. And now you have seen how Flipkart, how others in Big Basket and others have been priced in India, and we then and there we decided to align ourselves more with the startup community in this part of the world. And you have seen how we have worked with Facebook investing into Flipkart and other startups, and here in Bangladesh also how we have worked so deeply with Maya, Prabha, Chaldal, Shopap and Pathao and other startups, and now they are almost reaching maturity. And also how we have worked so closely with Alipay and financial service of this world of Jack Ma to invest and buy 20% of fastest moving. I don't even think that Bikash is anymore a startup. So, but again, if history tells us that what we could do along with Bikash to bring in Alipay into this country. So this is how one startup and the new set of promoters, new set of brilliant people can align and redefine the possible future of the manufacturing world, logistics world, as a whole service world. So that is why when Mr. Shariful Islam from Ben Forum and also his able colleague Sajid was asking me what could be my kind of topic to discuss, and I thought fintech partnerships, collaborative strategies for traditional financial institutions or the high street banks known as, and emerging startups could be the point of discussion in a forum, in an August forum like this. So we all know the fintech landscape in our part of the world, the transform how people manage money and make payments, invest and access credit. And with the digital banking license forthcoming, and while we are trying to popularize the essence of digital banking, possibly all of you are aware how do we justify that yes, the missing link, the access to credit. Impact on traditional financial institutions, fintech disruptions challenged institutes to invest or risk losing market size. That is why when I asked the CEO of a large bank, that he was at the very outset telling me, do we need to invest in a digital bank? We are already ahead in the game with our this app and this kind of facility in place. But at the end of the day, we found him spearheading other 9 banks to put up a digital bank license application along with other 9 banks known as blah, blah, blah. Importance of collaboration, what we started with, collaboration allows traditional financial institutes to tap into fintech's innovation while startups access, of course, resources. And of course, we all know, being next to each other, the leading startups and now leading to maturity also, Series A, Series B, fundraising, some current fintech organizations like Bikash, Rocket in Bangladesh, Nagod in Bangladesh, and of course in our neighboring country, Paytm, PhonePe, Bank Bazaar, and lending card like Flipkart. The power of collaboration, of course we know I think I have adequately justified why did we tried our best to align innovatively with the startup community in this part of the world and become and find out a role of hub and spoke. If we are the hub and using the startups, emerging startups at the spoke or delivering quality kind of project to not only to reduce the price metrics, more importantly, to reach the destination model with a common vision. So synergy of strengths. Traditional institutions bring experience and resources, of course, while startups contribute innovation and agility. Accelerating growth, collaboration can lead to accelerated growth, expanded customer bases, and enhanced product offerings. Of course, there are new products, and most of in the era of artificial intelligence, in the era of bricks and mortars being abolished, we have seen during COVID how Amazon went into bricks and mortars, how Walmart went into online. So these two trends and the powered by AI and others, and the emerging reality in the world has forced most of the large enterprises in the world to go for further alliances with the brilliant outfits or brilliant promoters or the young minds who can chart out the future direction of the society and the marketplace more than the high street banks or high street other major mainstream organizations. Tapping into expertise, as I told you at the very outset, why did we decide that yes, where are the IIT, IIM, BUET or IBA graduates are going? Why are not we getting the best of the BUET or IBA or IIT or IIM graduates, because all were becoming, trying to understand the gap in the marketplace, trying to understand the gap in the society, trying to chart and identify the future gaps while the society is counting how to delineate the new check, how to write the new check of prosperity, growth and inclusive growth. So established institutions provide regulatory knowledge, compliance maybe, while startups offer technological expertise in the name of more innovation and going beyond the boxes in thinking. Incentives for traditional financial institutions. That CEO, very distinguished CEO and the esteemed client of ours, he was telling when I asked him, I rather quizzed him that yes, why did you apply for this digital banking license? So he told me with a gloomy face or quasi-gloomy face, Mamun bhai, that is how he addresses me, that I thought I did not want to become irrelevant 10 or 15 years down the line. So I have given a ITA or brick that on the future direction. In case the traditional banks are being forced to count their days or fold their carpet, so I have got a second option out. So that is what is happening. Even with regard to, while mainstream banks were reluctantly or quasi-reluctantly applying or teaming up with other banks to apply for a digital banking license, not to become irrelevant in the future time. Speed and agility. Startups are known for their agility and their ability to quickly adapt to changing market dynamics as well as shifting demand of the future clients. We don't even know what the future clients will ask from us. If you read that Harvard article, which has changed the way CEOs were thinking, even modern day CEOs were thinking, the future of work, the future of the world, what has influenced Mr. Elon Musk to change his total even recourse, what is forcing Amazon to redefine what is the size and characteristic of the future marketplace could be in the, not only in the AI world, maybe AI plus world, access to new markets and clients, the new emerging market. We don't even know. An Yale graduate, only 22 years old, he came up with his own organization which can understand, swallow, dream, execute what the teens are feeling. From his target market, his equity is all the community 13 to 19. And he is dictating the terms for Facebook, Amazon, Microsoft. You have to come to me if you want to understand the psyche of a 13 to 19 years old girl or a boy. So that could be another marketing tempo. 13 to 19. What are they thinking? What are they thinking of doing? Where are they going? Where are they, how they are dreaming? So this shifting marketplace is putting all the CEOs, all the entrepreneurs, all the possible promoters to think twice what we do in future. How do we fashion our future work? Innovation and technology, of course. Startups often bring fresh ideas and innovative technologies that traditional financial institutions might not have internally. Shifting client needs. I have spoken enough on this, and I'm sure I have heard from all the biggies in the startup world or the fintech world or even in the mainstream financial sector just before me. And I was also talking to two very esteemed CEOs kindly who agreed to sit beside me and talk to me. So I'm so grateful to both of them. So shifting client needs, as client needs and preferences evolve, traditional financial institutions must adapt to stay relevant. I have quoted that very esteemed CEO and the client CEO of mine and ours, and remain competitive. Collaborative strategies, investment and funding. Financial institutions can provide funding, allowing startups to access the capital they need while giving financial institutions exposure to new and potentially high growth ventures. We were able to, from PwC, we are working very closely with the central bank, IDRA, World Bank, and more importantly, Minister of Finance, how to market, how to mainstream the bank assurance through the banking institutions. That we have seen, even to sell the innovative product developed by the startups of this world, innovative startups in the world, in Europe, in North America, even in our next door neighbor in India. How do we take those innovative products developed by the startups to the ultimate clientele and ultimate client base? And there we found out, in the name of bank influencing the banks to sell and distribute the insurance product, we found out there could be so much of sensible collaboration between the mainstream banks and the startups or the fintechs. Financial institutions can provide, as I have mentioned, funding, and also for Chaldal or ShopUp or other peers of this world. And we are working hand in hand with the mainstream banks to raise money, to raise debt, and also to rebalance between equity and debt, and try to make more sensible return on investment and of course return on equity. Establishing or participating in incubator or accelerator programs can provide startups with mentoring, resources, and networking opportunities. Financial institutions can offer expertise in exchange for insights into innovative technologies. Open innovation challenges and invite more and more challenges and brainstorming. Financial institutions can organize challenges or competitions where startups present solutions to specific problems or industry challenges, encouraging startups to develop products or services that address the institution's needs. We are now marketing lot of product in the emerging Africa, where most of the development partners like World Bank, Asian Development Bank, African Development Bank, they want more economic synergy to be created at the bottom of the pyramid of the institutions in Africa and Latin America. And there we are increasingly tying up with the startups to innovate product, to come up with linkages product, and so that we can bring the ultimate product solution to the target market and the emerging target market in Africa and Latin America, precisely to bring down the ultimate delivery cost or product delivery cost to the target market. Collaborative projects, joint projects between financial institutions and startups can lead to the creation of new products, services, or technologies. These projects leverage the strengths of both parties and can result in innovative solutions. Partnerships for technology integration. Financial institutions can partner with startups to integrate their innovative technologies into the institution's existing systems. This can enhance the institution's offering and improve, of course, efficiency. Data sharing and insights. Startups we have seen in corporate America, while all the biggies are thinking to redefine their directional moves, is how they are outsourcing to the university labs, incubation labs, even to the small, almost garage-produced startups to for their data, big data analysis, data sourcing, data analytics, and converting data into further actions. So startups often have access to valuable data and insights, which is called experience consulting also. How I have given you the example of that New York based, that small startup coming from a just Yale graduate of 22 years old, that how to further read the possible psyche of the teens between 13 to 19, and how to make a data mining around the thinking and liking and possible future of those teens, expanding teens market for all the FMCG companies, at least in corporate America. Collaborative agreements can be formed to share data in a secure and mutually beneficial manner. Even the FMCG companies now trying to encash data for the benefit of holding on to the new clients, and not only holding on to the new clients, also bridging with the old, wealthy, as well as legacy client, like the big family offices, family businesses, as well as traditional large conglomerates in the emerging markets. How do we bridge between new client like the startup promoters, enterprise promoters, business successor, as well as with the legacy of the large unicorn in China, emerging unicorn in Indonesia, Malaysia, and other emerging Asia, Africa, and Latin American countries. Collaboration strategies, joint marketing and branding, collaborative marketing efforts, digital marketing, we have seen. We did a very good study for a leading telecom company through our experience consulting. I cannot resist myself but to at least share a bit of that study. That leading telecom company used to sponsor everything in this world. Lead news, this matra, that matra, in all the television. Everything means everything. Then they engaged us, our experience consulting people. And we, in return, engaged 2 startups in Hyderabad and Bangalore to do a study of all their marketing programs. And to our utter surprise, at least to a very traditional strategy professor who dared to teach also strategic marketing in some of the business schools, we found out to our utter surprise, it had no linear relationship with the sponsorship and the sales of the SIMs from the telecom companies. So what they could do, they stopped all their advertisement and sponsorship of the television programs. We might have done some injustice to the popular television programs, but we could save a lot of money. I repeat, a lot of money for the telecom company through this experience consulting outcome done by our young Turks in the data and analytics team, as well as backed by, or in today's world, powered by those 2 startups in Hyderabad and Bangalore. So believe you me, this kind of forging the new alliance and emerging alliance can not only reduce our cost, can help us enormously to reach to our destination or the desired destination. Networking and knowledge transfer, of course, new are the storage and mine of knowledge. So Fahim is looking at me, and I know for sure Fahim in my class can learn so much of wisdom than a strategy teaching professor and an old man or a legacy person like me. No doubt about it. So I truly believe that establishing financial institution can provide startups with mentorship, industry expertise, and guidance to help them navigate regulatory and compliance challenges, and vice versa. Financial institutions can also establish their own venture capital arms to invest in startups strategically aligned with their own business goals, and more importantly, shifting business goals. My boss in Standard Chartered Bank used to tell me, say, my father-in-law often ask me, everybody is changing their job, taking up new job in other banks. And my dear son-in-law, what has happened to you? Why are you sticking to this institution for 20 odd years? The reply was, Bapuji, my institution itself is changing. So I do not feel the need of changing the institution and jumping into new institution. So believe you me, unless you are changing, you are going backward, because the entire world is changing. This is not a change management class, I know for sure, and I am not trying to be also behaving to be pedantic. Strategic investments, financial institutions can make strategic investments in startups that align with their long-term strategies, as I have already mentioned, potentially leading to partnerships or acquisitions down the line. Co-development of products, collaborating on the development of new financial products or services can allow both parties to contribute their strengths and create offerings that cater to emerging customer needs. And when we talk of emerging customer needs, shifting customer needs, more importantly, evolving customer needs, I was just peeping into a reprint of the Harvard Business Review article in the Brand Forum magazine. So I thought that yes, read this newer version of the Harvard Business School reviews as well as professors' lectures, and I feel frightened at the age of 62. Wow, I'm becoming increasingly irrelevant, possibly to the imminent world, not only the future world. So much of changes with the help of aid of technology, innovative thinking, beyond the box thinking. It is no more how Steve Jobs mentioned about iPhone, or how maybe Microsoft founder talking about Bill Gates, talking about changing world and smartphone becoming irrelevant in 2030. It is more than that, because AI, I don't know how it encourages the youngsters sitting in front of me. AI makes me so much frightened where the world can get into. So get ready for the writing, changing, feeling, converting the thinking process of the young generation, young, evolving, emerging client base of the world. Last but not the least, keys to successful collaboration, open communication, of course, learn from each other. I learned from one gentleman who I treat as one of my chief advisors here, or prominent advisors here. He told me, Mamun bhai, he's younger brother to me, but knowledge-wise, he's much more superior than me. Because of Bangladesh culture, you have to address the seniors as bhai, and we have to keep on pretending to be loving our younger brothers, even if we don't love them. So, but he comes up with so much of wisdom that yes, accept the mistake, learn from the mistakes, and create a culture of accepting from the mistakes. Emphasize the importance of clear and open lines of communication between both the parties, financial institutions and the fintech, in the form of course, startups. Common goals highlight the necessity of shared objectives and aligned vision or common vision. Both parties should have a clear understanding of what they aim to achieve through collaboration. Is it cost reduction? Is it finding out new product, understanding the new psyche of the emerging and large customer base, or the pseudo customer community? Flexibility and adaptability. Explain the need to be adaptable to changing market conditions and evolving customer preferences. Collaboration should allow for adjustments and pivots as needed. Of course, mutual benefit, we thrive on how do we scratch each other's back. Stress the successful collaboration should provide advantages for both sides, both parties, both stakeholders. Traditional institutions gain access to innovation while startups gain credibility and, of course, much needed resources. Thank you so much for your patient hearing.